prices come in lower than expected. Non-farm productivity comes at 2.8%, worse than expected. Preliminary unit labor costs better than expected by 2.8%. But the most important news, I think, or the most important thing to pay attention to here today is the fact that the Fed fund futures are literally collapsing as far as the probability for a rate cut in the future. Just this week, and all of the geopolitical tensions that are going on in the world, the Fed fund futures have been pushed from June to July and now out into September. And the hypothesis that we're kind of thinking about right now is that crude oil, as it's risen here, as it is rising this week inside of its long steps, challenging, you could make a case a 5-year downtrend. As the crude oil prices have continued to increase, the Fed fund futures the probabilities have fallen. And what we're thinking about is that the Fed fund futures, the futures traders, are perceiving that inflation is going to be increasing with war, and that higher crude oil prices will create higher consumer price inflation and higher producer price inflation. And if there's no crisis yet in terms of, there's no perceived crash, right, as far as the indices go yet, and we're only, say, 4 days into this war, that dollar strength trade, and dollar strength is a risk off type of environment. It correlated with crude oil going up. Despite the dollar's strength, crude oil increasing all across the world. It said that 90% of all of Asia's oil comes from the straits, through that Straits of Hormuz. So there's a huge inflationary moment coming inside of our markets. And the question now, is Wall Street is trying to answer, is how many days does Japan have? How many days of fuel does China have? How many days of fuel does Korea have? So those are starting to become questions here. The dollar strength trade, all of our leading indicators are suggesting that there is a risk-off event that is developing here as we're going into our Thursday timeframe. First of all, the dollar is still inside of extensions. Now, it hasn't broken through its opposing measured move to confirm its targets above. That break would come at the 99,295. So that level breaks, the indices are essentially crashing from a dollar strength environment. When we're thinking about Bank is inside of its series of shorts. Last week, Thursday's highs to lows. It's still in a downtrend. Until it breaks that 47.90, there's a downside risk event. Then there's the VIX running into its very first daily long setup after a trend break. Now, note that it has not confirmed its targets above by breaking out of the 2240. That's what we're going to watch for here today. We hold below the 2240 and the VIX declines, the indices rally into the end of the week. We break out of the 2240, we're off to the races here. There's a VIX explosion going into the weekend. The reason that Thursday mornings are so important, specifically this Thursday morning, is because it's the last full day of volume and participation. Sometimes Fridays are very quiet. And so Tuesday, Wednesdays, and Thursdays are normally when the trend for a market for a week is. This stream continues at eMiniAddict.com. The link is in the description. Join me there for tools and resources for learning measured move trading. I wrote the book on the measured move. Check out the hundreds of others that have learned trading plan development, pattern recognition, money management, and trading discipline with me to become the best, most confident trader that you can be.